Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and we've had a change of plans. Today, we were going to talk about Bollinger Bands to the How to Trade and Switch Markets community. I was going to give you a nice Bollinger Bands workshop. We're going to go ahead and do that next week. I promise I'll give you the ins and outs, some good settings, some different ways to trade Bollinger Bands. But right this minute, we've got to cover current events. And if we don't cover these current events, then we're likely to get left out in the cold, especially for early week trade next week. So it's very important that we recap what happened in Jackson Hole, Wyoming today. It's very important that we see what's going on the FOMC Board of Governors. Huge news there. We've got an announcement, supposedly a big announcement from Trump anytime. It was supposed to be at 10 a.m. my time, about noon Eastern. Well, it looks like we're running about an hour late. There's a lot going on. You've got warships on the coast of Venezuela. A lot of people talking about a lot of different things right now. And I have to tell you, you had a former National Security Advisor, John Bolton's house got raided today. And if you don't believe that all this stuff is going to translate into market action and price action, you don't know what you're talking about. I mean, listen, guys, there's an old saying. And I'm kind of an old guy, so I go by conventional wisdom. I've been around a little bit. I had an opportunity to learn from somebody who was a multimillionaire and more along the lines of being a honcho on Wall Street. That was my Uncle Gary Vernier. He was a player. He was a player with Shell Oil, and he had a lot of contacts, and he had contacts all over the world. And he was in some of these circles that weren't too far disconnected from politics. And he used to tell me, he said, Shane, you don't know the markets unless you know politics. And I said, well, I've always thought about that. I said, listen, I'm not a political talking head. I'm not going to give you opinion. I'm not going to tell you to vote right, left, whatever. I don't care what your political affiliations are, but you have to understand what drives markets if you're going to be a trader. Today, we saw some cause and effect. We saw some big-time market movements. Price action right now is off the chain. I mean, we're up about 1,000 points for the Dow. I got a trade idea out for U.S. oil we're going to talk about. Dollar CAD's coming into play. All of a sudden, Canada decides they're going to drop some tariffs against the states. This is crazy. This is crazy town on a Friday. I'm excited. I'm glad to be here. It's been a great trading day. I love to come in on Fridays with already the money in the bank and talk no donation and say, be careful, be careful. But boy, when these reversals come and these market sweeps come driven by fundamentals like we've seen today, you have to get in there. You have to unpack it. You say, okay, where do we go from here? Where are my levels now? What could happen next week? Where am I going to be in 7 days as opposed to where are we going to be maybe in 2 seconds? Very important that we understand what's driving the markets. A fascinating lesson in geopolitics today, in politics, in the domestic politics here in the United States that's driving price action. There's no question about it. So we're going to go ahead and we're going to unpack all this. We had some trade ideas that were going very well, and they just absolutely got crashed. We had one in the Euro USD I'm going to cover right now that's in trouble. We had one in the dollar yen that was a fantastic trade. It looked to me like it was an easy money trade, and we had the big reversal on today's news from Jackson Hole. So we're going to dig into this. We're going to get it done. If you have any questions at all, ask. We're going to try not to get too far out in the political tall grass, but I tell you what, I've got 3 events right now that all point towards major changes in the global financial system, and they're on the way. So be ready for anything. So yes, sir, good to see you. Welcome, everybody. I got way behind on the live chat already. John Ilya, good to see you, John. I sure appreciate everybody coming back in. Tina Jing, good to see you, Tina. Welcome. Hi, Shane, the giant green candle of gold. Tina had a fantastic trade earlier today. Absolutely fantastic. I like to see folks get on the right side of the markets, so I absolutely enjoy that type of really, those are great messages. I appreciate those. Somebody gets on the right side of it, does well, works toward a goal. That's what everybody in here is doing. Very, very important that we stick to it, not lose our heads when things get crazy, and they're crazy right now. So good to see everybody over in the How to Trade community. Lead, always a pleasure. Lead at Dave F19. Hi, Shane. What a day. What a day. What a day, what a day. We're going to cover gold here in a second. I'm going to give you my outlook. Not much has changed, but I think that we're going over 3,500. I really do. Let's see. Andrea Gorwell. Hi, Shane. My head is spinning today. Gold is finally moving. Yeah, finally, right? Absolutely, finally. Bobby Bob, good to see you, Bobby. Welcome. Hi, Coach. This week was a bit tricky for me. I ended it feeling quite disappointed, especially with my country's football team losing in the Chan quarters. Well, what can you say? I mean, my football team starts playing here in about 2 weeks. American football. So I'm still in hibernation, still calm. But once football season gets started, it definitely is one of my favorite times of the year. American football, that is. Soccer, I don't know much about soccer or football internationally. Let me see. Yes, sir. Let me see. Crazy quick switch. The yen looking really bearish now. Yeah, we're going to go look at the yen here in a second. Tina Jing didn't quite hit my 2 risk versus reward. Yeah. It's tough. Figuring out how far these markets are going to go is very, very difficult. All right, guys, let's go ahead and get on with the show. Euro USD, this was one that I really thought we had locked in the woodshed for a profit. It was looking very good at yesterday's close. It really was. We had a nice bearish price action. We even traded beneath yesterday's low. I mean, this was looking pretty good. I thought we were probably going to go down and check out maybe 115 even and get a real nice sweep out of this. This was our basic trend line reversal. We did a video on that a while back over on the How to Trade channel. This is just a trend line reversal, guys. There's your first test, second test. There's your third test. We always are focused on the third test. Theoretically, that's where the market's either going to make or break itself. And you can see we had a rally right after that third. We came down and hit it again, and then we finally broke bearish. And right there was our bearish entry, doji, and then a nice big sweep lower. And it looked to me like we were going to be in business right there. Your low was right around, 116. And then we traded down earlier today. We traded way down there, and it looked like we were going to break and run and run and run. And it just didn't happen. And the reason why it didn't happen was Jay Powell. Jay Powell said some stuff at Jackson Hole today that indicates that rate cuts are coming. And I'll unpack all that for you in a second. But the price action here, very, very serious. It's severe now. I mean, this really was our stop out point right above that swing high. So we were right on the doorstep of a 1-to-1 payoff, very, very close. And now the reversal's on. So if you're holding, the Euro USD shorts based on that trend line reversal, we talked a lot about this trade this week. I don't think you can do it any longer. I think you have to scratch whatever you've got on the board and move on to the next trade, just because we are moving rapidly into an explosive financial environment. And the reason why is our news cycle, no question about it. So right there, Euro USD. The other one that I want to cover right off the bat before we get into the news, we're going to talk U.S. oil in a second. We've got a real good one lining up here. We've also got a great level on the dollar CAD we put out earlier this week. But the dollar yen, this was our 920. This was our 920 crossover, and we were looking pretty good, to be real honest with you. We had the buy right there. We had the nice rally. Then it sort of came back against us. 4-hour time frame, 4-hour chart here on the dollar yen. And then right here, we sort of had that signal, that sell signal. I said, don't sell it. You don't want to sell it. Dance with the one that brought us right there, and let's see what we can do. Nice big rally, and then look at that candle. I mean, those are account breakers. Those candles right there are account breakers. You have to be in a position to recognize what's happening, and you have to be able to pull the trigger and get out. Now, this is one of the reasons why we have stop losses. We got stopped out, even though, to take a loss on this trade would just be almost a sin. I mean, your entry point was right around 147.76, and then you've got really highs up there at 148.78, or 77. So it's 100 pips in the go. I mean, you're going 100 pips. That's a situation where if you were shooting for more than that, I would say maybe I could say you're a little greedy. Maybe. That's okay, though. There's nothing wrong with greed. That's the old Gordon Gekko saying greed works, right? Well, I mean, that's pretty much a 1-to-1 payoff. Our stop loss was down here somewhere around 146.66. So it was about 100 to win 100 pips. My 1-to-1 risk versus reward, there's no way I'm taking a loss on that trade. Now, if you were in this to win it, if we were looking for 150 to the top side, maybe where we had sort of our market structure profit target up there about 150.70, about another 200 pips up the road, you took a loss. But that was a situation where if you're up 100 pips, listen, I hate moving my break even. If I'm scalping, I don't move my stop losses to break even. I just put my trades down, especially yesterday. We did the Piranha workshop. I showed you guys that crude oil trade. It actually did eventually win. But those trades, you can't be moving your stop loss to break even on a real tight scalp, like a 5 to 8 tick scalp. Now, if you are looking for 300 pips or 400 pips and it goes 100 pips in your favor, you cannot take a loss there. And I'll tell you what, if I would have taken a loss on that dollar yen trade back in the 7 V-bar trading group in 2011, that's history. That's just the way it was. The number one thing we were taught was never make a winner a loser. That was the number one thing. Never make a winner a loser. Well, now listen, when you're scalping, you can't really do that. You say, oh, well, I'm only looking for 5 to 8 ticks or 5 pips. Yeah, it's got to hit your target. I mean, those are conservative targets. It's got to hit your target for you to have a winner on your hands. But when you're looking for 300 pips or 400 pips, and this thing goes 150 pips in your favor, you got to protect yourself. I'm sorry, you probably have to move to break even at that point, because not only are you giving back 100 pips profit, but you're also taking a 100 pip loss on that yen trade. And if you guys remember the concept of the swing I talked about, that's a 200 pip swing. Those types of swings absolutely kill you. I actually closed the demo trade out. I should have left it rolling, but we went from being up about $650, $750 to down $750. That's a $1,500 swing just because a news item killed us. Can't let that happen, guys. I want everybody in here to be very smart, be structured, be disciplined in what you do. Now, if you're intraday scalping, 1-minute charts, 5-minute charts, you're not going to have the luxury to move to break even. You're not going to have the luxury to do that. You're going to have to just let the trades play out and look at your winning percentage and execute a ton of trades. Like the Piranha yesterday, for instance. I would say that if you were executing the Piranha strategy on 4 or 5 different assets and you were trying to put together a winning record, you're not going to be able to just move it. Okay, it's going to go 4 pips in my favor, and then I move to break even. Believe me, it's too tight. It won't work. With the spreads involved and the OTC brokerages, you're going to struggle doing that. But on something like this, if I'd have taken a loss on that, I would have been fired. I'm not kidding you. I'd have got shut down. My sub account would have been shut down, and he'd have said, hit the showers and come back next month. That's the way it would have been. That's the way it would have been. So you guys, if you're trading prop, if you're trading your own money, you're going to be a little more understanding with your losses. But really, if you took a loss on this trade, hold your feet to the fire a little bit. Sit around and say, wait a minute, I didn't see that the market was reversing when Jay Powell talked this morning. Wait a minute, I didn't see that it was getting out of hand. You got to see that. You got to see that. And that's where a lot of our other analysis comes into play. That's why I'm a hybrid trader. I'm always looking at what's moving the markets in addition to our technicals. And fun day to trade, though. You guys can see I'm revved up. I mean, this is a fun day, so good to see. Let me see. Son Goku, hello. What did I miss? You missed a lot. Don't worry about it. We're going to cover it all right now. Let me see. Could you also do that on gold too? Yeah, I mean, we're going to go ahead and take a look at the gold market. I'm going to give you my outlook on it right here. Actually, let's just go ahead and do it. 30-minute chart. This is one that I wanted to execute for you live. Really beautiful, absolutely beautiful move. Spike low, spike high, pullback, and we're still rolling higher, so we're still incredibly bullish. If you guys got on the right side of gold today, you did very, very well. You did very, very well. Let me see. Alan 25. I got crucified on the dollar yen demo dollars. Thank God. Yeah, I mean that's one of those where I could tell you some stories on getting hit like that, and it wasn't demo dollars. That gold trade back from July still stinging me. That was a bad sweep in the middle of the day. Ooh, gives me chills. Occupational hazard, I guess. In any case, gold, I wanted to execute this on a 30-minute chart because it's fantastic. Great market structure. You say, Shane, if you're going to trade an intraday trend for something like a gold, what do you look to do? And I go this. I mean, right there, 6:30 a.m. my time, 8:30 a.m. Eastern, about an hour before the Wall Street open. Nice big rally. And then you get the pullback. That pullback candle right there, I was looking at my chops. I'm buying 33.57s. No question about it. 33.58s. We're playing the trend off the 38%, and we're moving higher. That was a high percentage trade. You can see, though, we didn't get it. And that's okay. There's nothing wrong with that. I mean, we traded down to about 33.67. I was locked and loaded. You say, Shane, that was still $10 off. I go, in this kind of volatility, it doesn't matter. We can make up $10 easily. Look at the range on that price bar. The range on that price bar is 11. So, I mean, we could easily have got that. So I'm still hanging tight here. We're not going to get that today. We're going to settle probably up around 33.75 if I had to bet on where gold settles. But really great intraday price action. If you guys made some money on that, fantastic. I want to check in on our 920 with our gold and see exactly what's happened. Okay, this is fascinating stuff because this is one of those trades. 4-hour crossover, 920 crossover, 9 EMA crosses over the 20, and there it is. And this is sort of another reason why I recommend not just bailing out of these trades and changing your mind when you get conflicting signals. If that was your entry, your swing low right there was going to be your stop loss. Right there was going to be your entry, and you got really just a beautiful runner there on a 4-hour chart. Really a fantastic trade. Now, you did get a sell signal right there. And a lot of folks are going to say, Shane, you don't know what you're talking about. You're going in circles. And I say, no, I'm not. I'm being very consistent with what I'm saying. My stop loss for that trade right there, bang. Swing lows, very important. Market structure, you got to know really where the low was. And you can see we almost, for our RSI, and I don't use it on a 4-hour chart, but our RSI was very close to being in oversold territory. We were right down there, but still we got the nice rally. There was the crossover back on the 20th. Bad action. Actually, a sell signal develops, and then you get the big sweep. So that would be a position where today's announcements from Jay Powell really helped you. Clearly, I mean, you won the trade if you weathered the storm. Now, as far as where do I think gold's going? Well, I mean, that's sort of an interesting type of a thing. I'm a big fan of chart patterns. I'm a big fan of my macro levels, and you guys are sick of watching me do this on a monthly chart and a weekly chart. I know it. It's okay. The trend is up. This is a bullish flag, excuse me. This is a bullish flag formation. If you're brand new to the streams, I've drawn this picture probably, no kidding, I mean 50 times. So we could say bullish pennant, you could say bullish flag, whatever you want. It's all essentially the same thing, but that's a bullish flag. Now, the reason why it's a bullish flag is the uptrend is there, and we've got compression, 90-day compression. Hey, listen, we're cracking through August here. We're 20 days into August. Now we've got maybe 4-month compression here, a summertime worth of gold compression. Very difficult to trade on intraday time frames. We've all had our ups and downs doing that this summer. I know a majority of the traders in this room are gold traders, and that's great. I trade gold futures. But take a look at this. We know that 3,500 is the bee's knees right now. That is the number one number, right? Yeah, no kidding. It really is. Understand where 3,500 is at all times with regards to price action. Now, are we going to break? Well, we're in a triangle. We've got an opportunity potentially to break. What would send us higher? Rate cuts, politics, shakeup at the Fed, any sort of military action by the United States government on drug cartels in Venezuela and Mexico. Those will kick gold in the tail as well. Why? Because they're unprecedented military activities. You have to go back to really the United States going against Panama, Manuel Noriega back in the 80s. I was just a young kid, but I remember that being all over the news. We're on the precipice of something like that happening. That sends gold to 4,000. No question. Not because necessarily it's going to be a huge fight or anything, but it's uncertainty. It's something that's never happened, and that's a bullish market driver for gold. What we see happening in politics right now, what I'm going to go over, there's 3 stories that we've got to cover, and I'm going to cover them right now. But realistically, we're seeing things right now that we've just never seen. I like gold to the top side of the market. Now, my 30-minute chart was going to give us the trade that we needed to do. As far as where we're at right now, let's go ahead and dial this down to a 30-minute chart on the 920. Okay, right there. So that theoretically would have been your buy. You can see just how tight we were. Boom, boom, boom. I mean, potentially, do you want to take that buy? It's too hard. I mean, this is your news bar. More than likely, you're going to fill that in. That's what we call a thin chain. You're going to fill that in at some point. If I was going to trade this signal off the 920, this is what I would be looking to do. I would build a Fibonacci on the current wave just like we did a minute ago, and I would wait for a pullback. You've got sort of your buy signal there from 33.66, but look at where your risk is going to be. It's almost going to be $44. You can't really do that. I'd rather do that on a monthly chart, but you get a pullback, something like this, maybe something like down in here. I think that's feasible. That's a better trade. So I would be very, very patient doing this on short time frames. As far as your 4-hour goes, the approach would be the same. If you aren't already long, and if you are long and you caught this move, great. I'd be waiting for a pullback. Something maybe down to my moving averages, maybe 62%, 33.43-ish. That could be pretty good. Now, as far as what do I think is going to happen with the Fibonacci's and the things that I do on the longer time frames, I mean, your daily chart is just absolutely terrible. And you can see our triangle essentially is what? It's an ascending wedge on the daily. We got a video on how to trade ascending wedges in the How to Trade Trading Academy. Go check it out. But this one right here, this is an ascending wedge. It all suggests that you're going above 3,500. So that's sort of what we would be looking at. Now, as far as I'm concerned on shorter time frames, I'm buying pullbacks. I showed you my 30 minutes Fibonacci's. Your 4-hour Fibonacci's, you're probably going to have to wait for next week's open to get a nice wave here to play off of. But we're probably going to be playing that to the bull, more than likely. And it's time to talk about why. Let me see. Tina Jing, is it worth letting the trend run? Listen, I can't really recommend anybody holds a position or closes out a position. That's not what I'm here to do. But I appreciate your question. My problem is I favor the bullish side of this. And over the years, I've got a lot of experience. A lot of my market calls have been spot on. A lot of them have been wrong. And I've been wrong before. I called for the last year of Biden's presidency, I called crude oil at $100 by Memorial Day. We saw the uptrends developing in crude. We had the geopolitical strife. We knew it was an election year. I had crude oil rallying. It didn't happen. Maybe it didn't happen because it was an election year. Who knows? I don't know. But I know that it didn't rally. So I was wrong on that. This same type of market read, I really see gold going to 4,000. And there's a lot of literature out there. I believe it was Goldman and Sachs said something like this a month or two ago. But this kind of chart pattern tells me that we're loading up for a significant move to the top side, a significant one. And I'm talking about a few $100, I'm talking about a test of 4,000. Now, by letting that intraday trend run, that small time frame trend run, the risk that we really run here is get rid of all of our analysis. We are flat, and markets don't have to move. And I could easily see this intraday trend, this 4-hour trend or this 30-minute trend. I could easily see us just sort of fizzing out and coming back down in here maybe till after Labor Day. What I'm saying is I got a pretty good feeling we're going higher, but I can't really tell you when. But we do have indicators and strategies that can get you long right now. Do I think it's worth holding? Man, I could easily see this getting really choppy and ugly and 35 being very stubborn. But once it finally goes, the trading is going to get very easy for us. The trader's going to get very easy for us. So I would say just stay patient. If you made some money trading gold today, that's fantastic. That's fantastic. Definitely want to see this one. Let me see right here. Ahmed, good to see you, Ahmed. Welcome. Let's see. Sengoku. I had a long Euro USD 8 hours ago and decided to exit due to the Powell speech. I hit take profit 1, but then the speech came and it went straight to take profit 3. I'm salty. Don't ever be salty when you made money. Don't ever. Hey, listen, once we close trades out, we don't worry about them again. Don't think about them again. You can look at them and say, okay, maybe. The only reason it went up to take profit 3 was because of what Powell said, and nobody knew what he was going to say today. That's why the markets are all fouled up. Don't beat yourself up over that, Sengoku. There's no way that you could have known, unless you're in Jackson Hole, Wyoming, which is about 2.5 hours that way from where I sit right now, unless you were in town and eating breakfast with the locals and they said, Powell's going to talk about cutting rates today. Unless you knew, there's no way that you could have known. Believe me, don't beat yourself up over that. Don't be salty. Take the money. Have a great weekend. That's what I would recommend. Should I have held on, in your opinion? No way. No way. Too risky, too volatile. We didn't know what Powell was going to say. We didn't know. Let me see. Hey, Mew, hello. Why gold spikes so much? You know, it was the J. Powell. I'm going to talk about it right now. Powell said some things, mate. Market's expecting a rate cut in the USD will usually be weak. Yep, that's right, Sengoku. Gold at 4K needs a catalyst to shoot it up. I just gave you 3. All right. Okay, guys, here we go. If you want to trade any of these ideas, be sure to head on over to switchmarkets.com. We're forming the How to Trade Switch community. We've got a webinar. I'm finishing that today. That's going to be hitting the wires. I will tell you when it's out and show you exactly where to watch it. And it's all about AI. It's about how you can use that algo builder software to really boost your trading, and that's complementary with an account at Switch Markets. You're going to learn a lot more about algo builder in the coming months. I did a review of the software last March. Since then, these guys have been working a lot, and it's getting pretty good, and they're still working on it. So I like it. I formed a few strategies on there that were interesting using RSI. That's what's in the video. So I hope you enjoy it, and it'll be out. I don't hope you enjoy it. I wish you enjoy it. I want you to enjoy it. We'll see, but that'll be out soon, and I'll go ahead and give you the quick and dirty of it when that exactly drops. But that'll be a pretty good one. As far as what we need to be looking at today, I've got all these trade ideas and all this stuff up. This is what it boils down to. Today was Powell Speaks Jackson Hole Symposium. That turned out to be the big event this week. You can see that is the news of the day as far as I'm concerned, and there's the headlines. Watch Jay Powell full policy speech. Fed Chair Jay Powell speaks about the economy, yada, 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 yada. So what exactly happened? Well, here it is. Powell indicates conditions may warrant interest rate cut as Feds proceeds carefully. Interesting. What does that mean? It means they're going to cut interest rates. It means Jay Powell caved to the pressure, and they're going to cut interest rates. But here's the caveat, and we're gonna talk about some things right here. Not a conspiracy theorist, really. They do exist. I can tell you that. People in that room know more than we do. Some say that would be a conspiracy, especially the impact that they're having on the market. Said live, Trump's making an announcement right now. I have no idea what it is. Keep an eye on your markets. We have no idea. But this is essentially what Powell said. The key quote right there, CNBC. With policy in restrictive territory, the baseline outlook and shifting balance of risks may warrant adjusting our policy stance, he said during an annual address at Jackson Hole, Wyoming. So what does that mean? It means they're in restrictive area, and it means that they're thinking about cutting rates. Well, right here. Well, he noted that the labor market remains in good shape and the economy has shown resilience. He said downside dangers are rising. At the same time, he said that tariffs are causing risks that inflation could rise again, a stagflation scenario that the Fed needs to avoid. So what does that mean? It means that they're going to punt away inflation and they're going to try to kick the economy in the tail. Why? To head off a recession. Why? Because no Fed chair wants to preside over a recession. It's that simple. They see problems in the job market. They see a lot going on there. They're also scared of tariffs. Right here is the actual verbiage from his prepared comments. And you can go back. You can check this out at the federalreserve.gov. Click on that. You can watch the tape of it if you want to watch the tape. He doesn't talk very long, just a few minutes. But right here, you can see here's the prepared comments. This is interesting. This is the key section. Current economic conditions and near-term outlook. When I appeared at this podium 1 year ago, the economy was at an inflection point, yada, yada, yada. So where are we at now? Over the subsequent 3 federal open market committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. Okay? So over the last 3 open market committees, they felt pretty good about it. They felt pretty good about employment and where the progress on inflation. Now, right here is where Jay bails out on everything. This tells us everything we need to know about the mindset, what's going on at the Fed, and the amount of pressure that's being put on these folks for the rate cuts. Here it is. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the long run, changes in tax, spending, and regulatory policies may also have important implications for growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects in the economy will be. Now, that means that Jay is pointing it right back at Trump. And he says, this is your problem because of the tariffs. We don't know what to do because of the tariffs, and your immigration policy has messed up the jobs market, and the tariffs is leading to inflation. So what are we going to do? They're going to try to head off a recession by cutting interest rates. And the reason why they're going to do that is because political pressure has been applied. That was the cop-out. That right there was the cop-out. That was Jay Powell passing the buck. He did it when COVID was here. Supply chains, do you guys remember any of that stuff? Oh, we got supply chain issues, and that's really short-term transitory inflation. I don't know if anybody remembers transitory. It's not transitory, it's entrenched. And what Jay Powell just said is that the risk right now is that we are going to be looking at a recession and an economic contraction. In order to avoid that, what are they going to do? They're going to transition out of their policy. Fed proceeds carefully because of the outliers. But what else happened? What else has been happening? Trump says he'll fire Fed Governor Lisa Cook if she doesn't resign. Mortgage fraud allegations. Criminal referral from the DOJ. They believe that they have Lisa Cook on mortgage fraud. Lisa Cook's a voting member on the FOMC. Voted to hold the rates static. They're talking about potentially removing Cook for cause. Trump would get the chance to reshape the central bank's governing board for years to come. That's the pressure. Don't get fooled, guys. This right here dictated this, and this right here is the cop-out. Everybody's trying to cover their own tails right now. What does all this mean to the markets? It means your rate cut probability jumped 14% today. Interesting. We went from 75 to 89 now that we're going to get a rate cut in September. And what does all that mean? I mean, really, what does it mean? It means that the dollar is getting whacked. It's off 1%. Right here, dollar CAD, interesting stuff. I thought we had a pretty good chance maybe to sell up there at 140.17. We don't. Why? Because the dollar's falling apart. We talked about this last week. Technically bearish. This U.S. dollar is technically bearish since the inauguration of Trump back in January. You've got a big-time sell-off in dollars. People are running from the dollar. There was our pullback. We thought that maybe the worst of this was over. We were going to reestablish ourselves above 100. Not now. They're going to cut interest rates. They're going to cut. They're going to cut it, and they're going to cut it again. And with or without Jay Powell, that's what removing Lisa Cook's all about. Has nothing to do. I mean, mortgage fraud, sure, but they're going to reshape the FOMC, and that board of directors is going to become much more dovish. Interest rate cuts and dovish policy are probably going to be the modus operandi for the last 3 years of the Trump presidency. Very, very similar to what Japan did, what the Japanese did after the crisis of 2001, 2002. Actually took them 10 years to act and put Abenomics in 2012, Shinzo Abe's plan. But essentially that's what it was. Cut interest rates, flood the market with money, draw foreign investiture. That's exactly what Trump's doing. It's Abenomics. With tariffs, of course. Right here, the end of year, December. This is where we think we're landing, 375 and 350. That's interesting stuff, guys. That's multiple rate cuts. That's 2 rate cuts, 25 basis point rate cuts. Boy, I'll tell you what, these are exciting times. Exciting times to be a trader, and there's going to be a lot going on. Let's go ahead and take a look at the US 30. Interesting. A lot of folks love the orb, right? How do you trade this orb? This is a hard one. Opening range breakout, 15-minute chart. You're looking at the up day going, it's up 1,000. Somebody must have made money on the orb. This was hard. This was really hard. Right there, opening bell, ding, ding, 15 minutes. Opening 15, second 15. It's setting up beautifully. And then the hammer comes down when Jay Powell speaks. And you can see that that bar right there was almost 1%. Your entry on this orb would have been right around 45, 520. But how are you going to manage that? You're up 200 points. You really are. I mean, just about 200 points. So, I mean, this trade is definitely in the green. Remember our rules for the opening range breakout right there. US 30, 15-minute chart. That would have been your entry point. All right, there's your entry. Where's your stop loss got to be? You know what I usually preach? Beneath the orb. This is one where I'd make an exception. I'd probably put it right beneath the bar. Why? Because the bar is huge. Can you even really take that trade? It's hard. It's really hard to take that because so much ground. I mean, the market moves so high on Jay Powell's comments. And what do we have here? Got a mess. If you bought this orb, you're in the money. I probably would rack them right now. I'd probably take the money right now and just say, well, that turned out to be a negative risk versus reward trade, but I'm going into late session on a Friday. Trump's going to speak. Anything can happen. This rally could easily be erased late day, or we could move higher. Boy, I would take it easy. I would take it easy with my risk right now, even though we've moved so much higher. We've gone so far. It's really hard to buy into an orb like that. I got to say, I probably would have been on the sidelines. Probably wouldn't have taken it. Even though there's money there. There's profit there. Really hard to take that. Really, really hard to take that. Something to think about there if you're trading the orb. As far as what I would be looking at for the US 30, though, it'd be looking something like this. Monthly. I always like going to my monthly charts. Why? Because they really give us a good idea of where price is. Notice no indicators, no nothing, just price action. We've broken 45. That was the key level in the US 30, no question. 45 right there. Let's go to a daily. It's a breakout. That was the catalyst. That something like this is what gold will look like over 3,500. That's what it'll look like. It'll be boom. It'll be a big move, just like that. So the real question is how do we trade it right now? I mean, I could go to a 30-minute chart if you'd like. Do we get an opportunity potentially to bid? This Fibonacci would be just a little bit different because I would start it right there, right at the Wall Street Open. So right there, 9:30 a.m. Eastern, 7:30 Mountain. And you could play probably right there. 45,475 would be a great bid. Do you think you're going to get a chance at it, though? Probably not. Probably not. So US 30, what do we want to do? You know, theoretically, you're going to want to probably buy a pullback down to 45. I'm confident that we'll get it next week, potentially. But it could be very, very good. Let's take a look at some of our others. Bitcoin. Same type of movement on Bitcoin. Let's go ahead and take a look at where we had our Bitcoin with regards to our Bollingers. I'm curious if we're broken out yet. Very close. That was really the money level, the one that we wanted, 105.4. We were hoping that this would be a little bit bigger pullback, and that's why you should never hope, really. Be confident with what you do. But this really looked good. I mean, it really looked good a little bit earlier this week. The low was down there right around 111. We thought that there was a nice opportunity potentially to get that wash everybody out under 110, go down, tag up with 105, and then go back to 125. I didn't really have a problem at all with that. You can see we've pretty much already tested it last week, 124.5, 125. We've been calling for that a long time. Take a look at this week's low, 111.658. What's our 13-week moving average? 111.474. Beautiful trade right off of that moving average. Still very bullish for Bitcoin, guys. Rate cuts are going to be a catalyst for cryptocurrencies to move higher. I mean, look at Ethereum. We were talking Ethereum the other day. We had a trade idea. Take a look at what happened. It went through the roof. I mean, this trade was an absolute banger. No question about it. Pulled back. We had really a beautiful entry, nice rotation, came down to that 50% level, and then bang. Absolutely broke out on the news today. Jay Powell didn't just send stocks higher, didn't just send the dollar lower, sent risk assets and commodities definitively higher. That's a big deal. That's a big move from Ethereum. A couple of things we need to look at here on the news front. It's been a big day. Canada drops many of its retaliatory tariffs towards the United States. A big day in Canada. Awfully big day in Canada. Interesting when we start seeing the big, Jackson Hole symposiums. I don't know that Mark Carney was in Jackson Hole, but there was a lot of honchos from around the world there, and there definitely was a delegation from Canada there. And my guess is that word dropped. Word came out that Jay Powell was going to cut interest rates, and what did that boil down to? It said, well, we got to dump our tariffs now, or else our exports are going to be in big, big trouble. So this is a big deal. This is potentially a big deal, the Canadian dollar. We did have a trade idea out a bit earlier this week on the Canadian dollar, and, we just missed it. We thought we were going to get it. We didn't get it. 140, I was relatively confident we were going to get an opportunity there at 140.17. Well, we just didn't flat get it. So right now we've rotated back down to 138.16. So the question now becomes, do we want to buy this market or do we want to sell it? I would still much rather sell it just because the falling interest rates are going to boost crude oil. They're going to boost crude oil. That's going to help the Canadian dollar. But now the tit-for-tat tariffs, we don't really know how that trade war is going to unfold between Mark Carney and Trump, and it really looks like it's a two-man trade war at this point. There's going to be a lot of action in the dollar CAD. For a trade right this minute, we could probably outline a scalp trade maybe on a daily time frame because there's the big sell-off. I mean, it has to do with pretty much everything. The U.S. cutting rates, so the dollar's getting hit, but the tariffs also figure into this equation. We don't really have any Fibonacci's there we can work from. Right now we're up against that 13-day EMA, which is pretty good, but the market is trending and it's hot. We could work right from this spike low. You've got 78% right there, 138.12, 13-day EMA at 138.16. Theoretically, this should be the bottom of today's move. The problem is, guys, is when the market trends like it's trending now, especially in the Forex majors, sometimes it's best just to hang back and wait for the dust to clear and then trade it. But if a person wanted to go long right now, we could certainly send them. You just got to be careful about this. This is counter trend trading. So let's go ahead and buy it. Let's go ahead and buy this thing, see what happens. Okay, we're officially long. Don't worry about the leverage. These are demo dollars. So where does my stop loss need to be realistically? We just bought, what did we buy? 138.15s. Why did we buy it? It's a counter trend play. We're going with a 13-period EMA plus a daily 78% retracement. So we're right there. We're trying to pick a bottom. Hard business to be in, guys. People tried to pick bottoms from there. They're all wrong thus far. Is this the correct level? What I would say is this. 138.15, I am exiting stage left once this swing low is taken out. Stop loss has to be right down there. So what do I want to wager? So if I bet 138.15 or if I bought 138.15, the question becomes, what do I need to get out of this trade? What am I going to risk? I would risk the bottom of this wave. That would give this trade a little bit of work. So that's swing low right down there at 137.82. That situation would give me sort of the basis for building my stop loss. And I'm going to go ahead and I'm going to pad that a few pips right beneath that 3/4 handle. So maybe 137.72-ish, something like that would be my stop. And then I'm going to go ahead and look for that rebound. So how many points do I have to get to make this worth it? 15. 15 plus 28 is what, 43? So 43 on top of 138.15, 138.58. Wow, that's pretty good math, huh? 138.58, something like this. That would be what I would look at for my trade. Is it a high-risk trade? You bet. Is this a 1%, 3%, or 5% trade? 1%. Why? Because we're bucking a major trend and we're bucking a major fundamental market driver, typically not recipes for success. But the beauty of it is the volatility has created a range that we can attack. And essentially what we're trading here is just filling in this range. High risk trade? Absolutely. Let's go down here though. Let's take a look at something like the weekly chart. Is there something in here that maybe is a little bit better? All right, we've already got our other things sort of ironed out. We know exactly what our dailies look like. Spike low, spike high. 137.92-ish. Interesting. That's going to help us. 38% is going to help us potentially. How about 137.09? That's a brilliant trade right there. Great level back into the golden zone. That's probably the one that I would favor. But right now, this is sort of an aggressive play. A lot going on in there, though. Weekly moving average at 137.80. This area right here, I mean, you hate to try to call bottoms. That should be the bottom. Right in here somewhere should be the bottom today. If it's not, It doesn't mean that we're going a little bit lower. It means we're going a lot lower. That's for sure. All right, guys, that's a pretty good look at the market today. We covered a little bit of everything, the majors, crypto. Our U.S. oil is going to be our trade idea of the day. I'm going to cover that, and then I'm going to answer all the questions in the live chat. I got behind a little bit. Gordon Williams, good to see you, Gordon. All right, U.S. oil. This is sort of our trade idea of the day. I've got a key level outline. Be sure to reference that. It's in the How to Trade trading room posted under the analytics section. What I believe what is our entry point? Somewhere 64.84, something like that. Right in here is an interesting look at the crude oil market. It's a weekly chart, spike high, spike low. Now we're looking to get that retracement. If we get a nice bullish retracement, then we can sell it. 38%, very, very strong level. I'm still bearish crude oil. I would love an opportunity to sell it, especially right up in front of that 65 handle, which is a big round key number, key level. I'll be looking at something like 64. Probably, I'm going to be aggressive with that one, probably 64.84s. I'm going to shade that a little bit. You could even probably go 64.75 to the short. That'll get you involved more than likely. Right now we're trading about 63.73, 63.69. Interesting zone. Definitely a target-rich environment today in crude oil. I typically go back to what I know the best. Trading crude oil for a long time, and I can tell you that I'm pretty comfortable trading it, and 38% on a weekly. This is the U.S. oil CFD, but this one right here, pretty good. If you're trading crude oil futures, that's fantastic. You'll notice that the numbers are different. Incredibly different. Something like this, volumes, Let's see this week's volume. Terrible. What is this, SEPI? We roll to AUK. So right here, you're going to go to crude oil futures. Trade in October OC. Spike high, spike low. Trading right now, we bounced off of the 13-week moving average at 63.99. Love the placement right off of 64. Really a strong scalp to the short. And now we're right up there. Bollinger midpoints at 64.25, 38% at 64.38. And that's for the new front month, October WTI crude oil futures. That's a pretty darn good short. We're watching that one closely. All right, everybody. See if I can answer a few questions, and I'm going to sign off. I went way long, but there was a lot to go over today. Let me see. Son Goku. Will cutting rates stave off recession, though? I mean, artificially propping up an economy will only lead to hardships in the future. Why not let the markets correct themselves? Well, that's exactly what's going to happen. Sooner or later, the chickens are going to come home to roost. I mean, pardon the cliche, but, you know, this goes back to the COVID era. Goes back to unlimited quantitative easing. Pump as much money in the system as you possibly can to prop it up. That's what COVID was. And, you know, I'll talk frankly about the financial world since COVID. They have not been able to unwind the debt bubble. Debt's only got worse. You've seen the big companies, the corporate interests. There's been a lot of winners out of the COVID era. The billionaire investors, you know, the Larry Finks, the BlackRocks of the world, they have increased their wealth exponentially since the COVID era. And a lot of it was because a lot of businesses couldn't survive. The way that the Fed and the government decided to stave off really a global depression. You can't lock economies down for really any period of time unless they will cease to function. We all know that. The answer was to provide as much liquidity as they possibly could. Unlimited quantitative easing. They were going to print as much money as it was going to take. Trillions, hundreds of trillions, whatever. It didn't matter. The idea was you have to provide liquidity to the system. So the Fed sat there and they said, we're going to pump our regional banks full of as much money as possible. We're going to encourage them to lend it at 0%. Favorable terms for everybody. Remember the disaster loans, the EIDL loans? They were given $1 million loans on the finger. So the government spending went through the roof. The Fed put as much money out through the banking system as it possibly could. And that what that created was not necessarily a liquidity crisis, meaning you couldn't get money. There was too much money. So what happens when there was that much money? Certain entities started stockpiling it. All right? Think about that. You can also use that money as collateral for future debt. They created a bubble they'll never be able to pop. And in order to pop it, that means you're going to have to go into a recession. To restore pricing stability, at least in the United States and probably globally, we need to crack down on the money supply. They need to go to interest rates 10, 15%. They need to hold them there for 6 to 9 months. It's going to be horrible. There's going to be a lot of bankruptcies. The people that are over-leveraged, the businesses that are over-leveraged are going to be corrected. They're not going to make it. They'll go through bankruptcy and they'll come back stronger. They'll restructure. That's what needs to happen here. The problem is that nobody wants to do it. From a political standpoint, the Trump administration wants 0% interest rates so they can spend and grow the economy. That is the metric. Grow the economy, grow the markets. Is it real? We watched the same thing happen in Japan. Japan's got the largest debt load in the world now. How does that work? Does it ever, can you do this forever? No, you can't. Eventually, the money's not worth anything. We've already seen it. From COVID, let's say you had $100 back in 2020. And you have that same $100 now. How much purchasing power did you lose? 20%? Go to a restaurant. Go to a car dealership. $73,000 for a new Chevy. And that's not even the deluxe version. That's just a pickup truck. Too much money in the system. They have to take it out. They're not going to. Jay Powell's decided they're going to cut interest rates because they don't want to go into a recession. Trump administration wants to cut interest rates to kickstart economic growth, stave off a recession, and so they can come back in the next election cycle and say, hey, look, our policies worked. Did they really, though, or did you just pump the system full of money? I really don't think there's a good answer right now, Sengoku. I think the rabbit's out of the hat, and the powers that be can't put it back. So for us, and I'm not being a doomsday guy, I'm just telling you, that's where we sit. Now, can changes be made? Yeah. The best thing to do would be to unwind this balance sheet, the Fed's balance sheet, maybe be restrictive for another 18 months or 2 years, but they're not going to do that because we can already see a recession's developing. The employment numbers are bad. Consumption's down. Retail sales weren't good. Not where they should be. What does all that mean? What does all that mean? It means that you need more money in the system. Good question. Let's see. Let's add a crossover on that orb. Yeah, yes, sir. I got to make that video. We'll put like the 920 crossover in the orb. Let me see. Laura's Pool. Hi, what is your main trading strategy? Is there any day trading strategy that you can recommend for a beginner? Yeah, Laura's, head on over How to Trade Calm YouTube channel. We've got a ton of strategies there. I got asked this question the other day. Which strategies would you recommend to a beginner? 3 of them. 920 EMA crossover. I would look at the 9 EMA with RSI just because it's easy. It's really easy to master that, not hard. And then probably the 5813. I like the orb strategy, the opening range breakout. A lot of beginners love that because it is simple. But to be able to really make that orb sing and trade it well, you have to understand what's going on for a given trading day, market state, and potential market movers. Today, the orb trade was really a challenge to take because the ranges were so big. And if you didn't know that as a beginner, there was a real good chance you could buy the top of the market and get hit. 920. Alan M says 920, baby. I like the 920. I think that if I was starting back in 2011, if I was starting again, I would probably be leaning on the 920, and I would be going with all sorts of different kinds of confirmation, not just RSI. And I would definitely be looking to time the market with the 920 and try to develop a strategy around that. Me, I didn't have that luxury. I was taught Bollinger Bands and then some advanced algos that we used that were based on fractal geometry that were very, very, I still have them. They're very, very challenging to trade. They are good, but they're very, very challenging and they're sophisticated. And to be honest with you, I had a degree in finance and I was 31 years old and I'd been bouncing around the financial markets in real estate for a while. So I had an idea of what I was talking about. And it was still really difficult for me, and it didn't make much sense. So I would go with something that makes sense, the 920 EMA crossover. Go check the video out. We've done a ton of workshops on it as well, and we may do one next week. We'll see. All right, everybody, that's enough for me. I'm pontificating about the state of the global economy, but I see a major debt bubble. I see way too much liquidity in the system, and nobody wants to pull the plug on it because pulling the plug on it costs votes. It makes times hard for a while. And Jay Powell right now, he's trying to preserve his legacy as Fed chairman, and that's going to mean cutting interest rates and not leaving office in a recession. He wants to avoid that at all costs. Remember, his term's up at the end of this year. He will not be back in 2026. Kind of expect the heat to come down on him if he doesn't cut interest rates. They're going to try to force him out by the end of the year. The Lisa Cook thing, I expect her to resign. The mortgage fraud looks like it's pretty cut and dry. I don't know. I haven't seen the evidence. So supposedly there's multiple homes involved, each being claimed that that's a primary residence. And what that does is gives you tax breaks in multiple states. That's illegal. If they can prove it, I don't know. I'd have to see the evidence, but that's a big no-no. And there's a lot of those prosecutions pending right now. So, all right, guys, that's long enough for me. That's about an hour. I'm going to go ahead and sign off here. Fantastic trading week. It was a challenge. A little bit slow in places, and then today's just an absolute light show. So I'm confident that next week's going to be a little bit better. I'll have the stream schedule up inside the How to Trade trading room a little bit later today. We've also got a few other things coming out. We've got shorts dropping all the time. Remember, you can always follow us at How to Trade on X. You can follow me at ShaneV_trader on X. If you're on the X platform, you can check us out there, and then all of our YouTube channels, Forex Signals TV, How to Trade Com, and then also Switch Markets. And then remember, if you want to trade anything, head on over to Switch. They'll get you set up. Our support team will get you up and running with an account relatively quickly. I mean, you can go demo just in a few minutes. And then if you want to go live, you got to pass the KYC process. But now they have reverse KYC. So up to $2,500, you can begin trading automatically while your KYC and approval process plays out. That gets you up and ready to trade right at the drop of a hat. All right, guys, I'm going to sign off for the weekend. I'm going to go out and see if we can catch a workout, maybe get a little bit of sun. I live in Montana, so you got to value the good weather while you have it. It should be a lot of fun, though. So you guys, if you've been in the market and had a tough one this week, get away from it. Turn the screens off, rest your brain, go have some fun. Get outside, get in nature if you can. Go do something. Don't burn yourself out on this. It's not worth looking at all weekend. If you're going to finish trading today, towards the end of the day, trade it strong. Don't be stupid. Only a couple hours left. There's no reason to really pile the risk on. I would say that in today's session, if you haven't made your money yet, unless you're going to play a reversal going into the close, you may want to just hold off until Monday. Something to think about there. All right, Tina, you have a nice weekend as well. Dave, F19, have a great weekend. All right, guys, I'm going to go ahead and sign off. You have a fantastic weekend. We will see you back here Monday on the week ahead. Trade the action well, and we'll talk soon. See you.